We're 3.5 hours into trading. It is Thursday, August 19th. Hello, traders. I'm sorry I wasn't able to get a video out yesterday. Super busy with the market. When it gets like that, I try and get the videos out, but I just simply couldn't. I saw some really nice moves setting up. That's what I want to focus on today. If you're just looking for picks, Nvidia, that's the pick of the day. There you go. I have a number of people who are giving me thumbs down on my videos because they just want the pick. They don't want to learn how to trade. They already know how to trade. They want my picks. Well, there you go. For the rest of you who want to learn how to do this yourself, this is going to be a rather lengthy video. I'm going to teach you all the different things that came into play yesterday, the types of patterns that you need to be aware of, and what you need to be watching. It's going to be a really educational video, so please bear with me. Before I do that, I'm going to take a look at my last pick because I always do that. Boeing. I showed you that short right here when the stock penetrated the 200-day moving average, and that turned out to be a fantastic short. This is where the video came out. You can see it. The stock is down considerably since then. It was at about 225. Now it's at 214. $10 move. Even with the market trading higher and up on the day, the stock is getting annihilated. We'll go back into that daily chart. Lucky pick, Pete. No, it's not a lucky pick. I told you exactly why I like Boeing for the pick of the day. It had all the check boxes marked, relative weakness, major technical breakdown, heavy volume, market was starting to soften. That's why I showed you that short. So let's move on to the market. Before I do that, I want to prove to you that I'm actually doing these trades and that they are time stamped in the chat room. Yesterday, into the close, the timestamp here would be about 10 minutes, an hour and 10 minutes before the close. I bought the CVX Lotto put debit spread, PDS, for 57 cents. So I bought the 98 puts, sold the 96 puts. I did that for a 57-cent debit. I like that risk reward ratio because if the stock continues to move lower, that means that the spread will be worth $2. I have $2 maximum potential on a 50-cent risk. That's about a 2-to-1 ratio. That sets up very nicely for me. The stock looked great. We can take a look at that short a little bit later. I also was in the SPY. I had initially gotten stopped out for a 20-cent gain on that short, and then I reshorted the futures. I'll also show you why. There's the next short there. You can see at 204, which is 55 minutes before the close. And that's when the market selling pressure really started to crank up. And I'm going to show you why I felt that was possible yesterday. And we're going to cover yesterday first, then we're going to cover today. Today was one of my best trading days of the year. I did have my best trade of the year today, and I'm going to show you that as well. It happened, by the way, to be on Nvidia, which is my bullish pick of the day. I'm going to continue to scroll down because I want to show you I took about a 15-point gain on futures there, took gain there. You can see this at 2:35 p.m. We all had some really nice trades on that. The chat room participated in it. And I'm going to continue to scroll down because I also entered a overnight short position on the S&P 500. Shop for overnight shorts. This is 10 minutes before the close. So we didn't have a lot of time, but that's why we have Option Stalker searches to help us identify the best candidates. No talking in the chat room unless you find a good short. That was my mandate. And I did a target put debit spread. There's the debit spread that I did. I bought the 247.50 puts and I sold the 245 puts for an 85-cent debit. Again, roughly that 2-to-1 ratio. This was a losing trade. One of my only losing trades overnight. So I also want to show you that I did short the S&P futures overnight, and I also suggested shorting some banks because they have, there you go, I'm short futures overnight. That was a 40-point winner. I closed that trade down before the open today. And if I continue to scroll down, you'll be able to see me closing that position this morning, but I'm not too concerned with that. Take my word for it. I took my gains before the open this morning, and I had already seen the overnight futures starting to rally off of their low, so I did not want to risk giving back a super nice gain like that, especially when the market's been strong, especially when the market's been choppy. Took 43-point gain. ES futures overnight. This was posted an hour before the open today. So now let's backtrack. Okay, Pete, all this activity, what the heck? How did this all set up? What happened? How did you know? So I'm going to continue to scroll back here, and you know from my previous videos that I've been telling you that there is a likelihood that we are going to see a big market drop into options expiration. Well, we got that drop right in here. And this was one of the keys. This was the FOMC minutes that came out. But before we go there, we've got to backtrack another day or two to take a look at the price action. I'm going to show you good price action. I'm going to show you crappy price action and how I could tell that the market was starting to hit some resistance. So we had a massive rally on Monday, and the market gapped down. It didn't stay down very long. And then all of a sudden, we had this, there's the gap down. We had support starting to form here. You can see tails under body, downward sloping trend line here. We had a bullish 10P cross right in here. And then all of a sudden, we get this really nice organized move higher. Well, this tells me it validates this support level right in here. And now all of a sudden, we're charging right back to the open from the day. Once we get through this level, we've got another bullish 10P cross right in here. 3 nice long green candles closing on their high. Now we are in this gap. Yes, we should have nice momentum the rest of the day. We traded it from the long side. Excellent move. Do you see how tight this trading pattern is? This is super important to watch for. When you have tight trading patterns like this, it tells me that even though we saw early selling, every attempt to sell is immediately met by a buy order. So the drops, the dips, can never get going because sellers are very passive, buyers are super aggressive. Boom, 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 boom. Market closes at an all-time high. And during this part of the rally right here, what did I tell my members in the chat room? I could go back and show you those comments. I'm not going to. I said, listen, folks, if you're short some put debits or put credit spreads out of the money, you're short some bullish put spreads, buy them back. I have been noticing that into monthly options expiration, we've seen some selling pressure. Trading firms, institutions, they know that they can sell the market off and they can force some of those put sellers to cover their positions at a loss, and that starts to feed on itself. So take your gains. We're at a new all-time high on the market. So then, here we go. Here's the next day. This was Tuesday. Tuesday, we get a market drop. And this is where I told everyone, be very careful because you get a market drop like this. And what's going to happen is you're going to get people instantly wanting to come in and buy that down gap because the market is going to bounce, right? That's what it did the day before. Buyers are super strong. This gap down is a buying opportunity. Well, when they come in and they rush in, they get quickly flushed out. Well, the market made a double top right in here. In my pre-open market comments, I had also warned that if the market can't get into this gap here and it starts to hit resistance, this is going to set up a very nice shorting opportunity. And it did. We had that bearish 10P cross here. 10P is early. It is predictive. It is not reactive. So you get your confirmation here with that double top and that upward sloping trend line breached, and then you get a really nice decline in here. Okay, this is some heavy selling pressure right in here. Got a nice bullish 10P cross in here. Now you get a double bottom, higher low. Okay, you can get long in here. This is the tell. Compare this, nice, steady price action. No dips. Buyers getting everything they can. Super aggressive. What happens here? Get a bounce. Boom. Sellers come in. Get another really nice bounce. Okay, certainly off of a higher low double bottom. Now you've got to have buyers coming in with a vengeance. No. There's a drop. Sellers are starting to flex their muscles, and they're showing that sellers are also aggressive now. Okay, well, we get a nice little rally here. Not so fast. Another little dip. This type of price action tells me that the bid is starting to soften. Buyers are not as aggressive, and sellers are aggressive. So let's go to yesterday's price action. We get another gap down. And there you go. There's your nice little rally back. We fill the gap in, but we can't get through this high. And that's, again, what I stated in my pre-open market comments. I said, look for a little gap or a little run higher that tries to challenge the high, tries to fill in this gap, and then fails. And if you see that, that is going to set up an excellent shorting opportunity. By the way, in the comments section of this video, you're going to see a link to my Twitter feed. You can get my pre-open market comments every day. Don't take my word for this. Go back and read my market comments the last 3-4 days. Read them for the last 2 weeks. Get a feel for my analysis. Validate that what I'm telling you right now is true. So we get this fail. Could not get in the gap. There's your upward sloping trend line there. If you wanted to be more aggressive on that bearish 10P cross, you could have gotten short right there. But certainly you've got a nice upward sloping trend line right here. This is also a good entry for a short position. So now we already know from Tuesday's price action that sellers are more aggressive than they were on Monday. And now all of a sudden you start to see this gradual drift lower. That tells me that buyers, every time they'd come in, like there was a nice candle here, that would have been a bullish flag formation. So you get, there's your flagpole, you get this little drop in here, you have your downward sloping trend line, boom, nice long green candle here. That's it, we're going higher. No, this was what I would consider to be a key bar for the day. That is a bearish hammer. Now you've got that upward sloping trend line breached, and the market can't get anything going. It can't force shorts to cover. The sellers have control in here. And look what 10P does. It drops and drops and drops, and then it never gets out of the seller here. Typically, we're going to see it above and below the zero line a few times. Here, it's just down, and you can see how there's just this gradual decline. This tells me that sellers were aggressive. They were keeping a lid on the rally. So here we go. Now we're 2 hours before the close. FOMC minutes come out. Initial reaction, very bullish, probably just because they figured that the Fed is super dovish. That's what the statement's going to be. We're going to keep interest rates at 0% or close to it. We're not going to be tightening anytime soon. So the initial reaction was to just buy that release. Not so fast. Half of that long green candle fails right away, and then you get this long red candle. 2 back-to-back long red candles closing on their low. This is a key price point. This type of selling pressure is very important. This also told us that sellers are starting to flex their muscles. Rally, drop, rally, drop, rally, drop. Okay, so we've got all of these factors working against the market. We know that sellers are getting more aggressive, and then we see these 2 long red bars. Not to worry, bullish hammer, nice long green candles stacked, but they never could challenge that top right there. And then there we go. There is a bearish engulfing candle. And by the way, look what 10P is doing. It is starting to spike, and a bearish cross is looming. That's a bearish cross. When you get a big spike and you get a crossover, that tells you that we're close to a selling opportunity. You get a big trough, you get a bullish cross down in here, that tells you that we're ready for a buying opportunity. This indicator took me 10 years to develop. It's all I need to trade the S&P 500. There's your bearish cross right there. We use the crosshair tool. And now all of a sudden, you can see after that bearish engulfing candle how the sellers are completely in control. They are for sure going to test the low of the day because you can't even, you get one little green bar in here, just a tiny reprieve, and then boom, there's another key bar. That is another bearish engulfing candle. So at this point, I was very, very confident that we were going to be going lower. I was short futures here. I covered here just in case, but then I reshorted instantly when I saw that bearish engulfing candle. And then I covered my futures position for a 15-point gain in here, and then decided just before the close right in here, I want to be short overnight. Then I covered before the open down here. So we got the selling pressure that we were looking for. Once the low from the week was taken out, right there, then the selling pressure really accelerated. So let's go into today's price action, and I'm going to give you a play-by-play on this. Truth be told, I was looking for an opening bounce. I felt that there was a chance that we might rally and try and fill in this gap, and that we would see resistance, 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 and then the bottom would fall out. That's the pattern that I was looking for. And I'm going to put up the daily chart, and I'm going to show you that that 50-day moving average, once we start seeing selling pressure off of the high, typically the market has gone in and it's tested the 50-day moving average. And I referenced red candles that close on their low of the day, like that one right there. Closed on the low, boom. Then you get this big follow through selling. Well, we got that, but the market's actually held its own today. There's another long red candle closing on its low. Boom. Then we get another big overnight drop. That's how I knew that we wanted to be short futures overnight. So today we have actually a fairly bullish candle, even though we have not gotten down to the 50-day moving average. So buyers were so excited that we were even close to it that they came in and they started gobbling up stocks. We'll go into the 5-minute chart, and now I'll give you the play-by-play for today. So here's how things were shaping up. We had this nice gap down. We had this long green candle. Okay, that's pretty nice. Now we get another long green candle that almost fills in this gap right here. This candle right here was a tiny retracement. What does that mean? Typically, if sellers are going to come in, they'll push it all the way back down. You'll get a bearish engulfing candle, or at least you'll get past the halfway point of this long green candle here. Didn't happen. That long green candle held most of its gains, and we stayed very, very close to the upper end of that candle. That's important because it tells me that buyers are still in control. Then you get another nice long green candle, and it's able to hold its gains pretty dang well. And we fill in the gap on the first attempt. That's also pretty impressive. But once you see selling pressure like that, you know that at some point the bid is going to be tested. And so I shorted futures after I saw this long red candle here. Long red candle, most of those gains, if you were short up there, held. So we had a doji and another long red candle. Well, I shorted in the middle of that long red candle. Then the market starts to drift lower. And in here, I saw these tiny little bodied candles. And I told members, I'm going to cover my short position right now because I don't like these tiny little candles in here. It tells me that there's a chance that we might get a rally. Plus, we had a bullish 10P cross right in here, right there, time-wise. So I don't want to be trading against the 10P indicator when we've got this type of very deep trough. So I'm going to err on the side of caution. I'm going to take my gains. I think I took about a 5-point gain on the S&P futures. Then what happened? Massive long green candle. Massive long green candle both closing on their highs. These were key bars, and this set up for just an unbelievable trading session that lasted about an hour. So let's go through that, and I'll tell you why this was so powerful. And I also want to show you the play-by-play in the chat room. I don't just want to make it sound like I predicted all of this and not have something to back that statement up with. So when you get these two long green candles like this, you want to see half of this long green candle preserved. And it was preserved right in there. So I started buying futures in here, had to weather a little bit of chop in here, but as soon as I saw this long red candle erased, we had this nice green candle here, we had a bullish hammer right in between here. I was like, okay, folks, we're starting to percolate here. We are going to take out this high, and when we do, we are going to run. I made 20 points on that S&P move right there. But more importantly, I was looking for stocks with relative strength because I felt that the market was going to move higher. We had a low here. We had a higher low double bottom. And we had these two long green candles, both closing on their high. That told me that buyers were completely in control right now. And we had a bullish 10P cross also working in our favor. So during this bearish 10P cross, what did the market do? Compressed. Typically, when you see a bearish 10P cross, you're going to see the market ka-chunk, 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 ka-chunk down. That also told me that we are going to be moving higher on the next bullish cross. So we're long in here. Let's go into the chat room and I'm going to show you what I just mentioned. And we're going to scroll through some of the comments and continue to go through as quickly as I can. There are my pre-open market comments. I can show you the gain that I made on my S&P trade. It was only a small 5-point gain, but I do want to show you that I did exit that trade before we got that market rally, and then I pivoted. And I did not waste time doing that. So as I continue to scroll down, now we're about a half an hour into the open. Now we're about almost an hour into the open. I did trade AGFY on the long side. That actually looked quite good. Market was easily able to fill in the gap on the first attempt. All the things that I've told you right here, I'm explaining to everyone about 50 minutes into the open. I said, listen, this is better than I thought as far as the bounce, but I am ready to short S&P. There I'm short. You can see at an hour and 5 minutes into the open, I'm short. And there's my stop on my S&P. I just wanted everybody to know where I'm getting out. Took my gain on S&P. This is an hour and 15 minutes into the open. I want to be short, just hoping to get in better. And I explain here that once we had this market drop, and let me go back into the chart because this is also important. So in here, I see this long red candle and I see this doji right here. It tells me that we're going to be going lower. But I really was hoping that we would test that high one more time and then fail. And I also had this bullish 10P cross back in here, so I wanted to be super, super careful. But once I saw this long red candle, I didn't hesitate to short. We had an upward sloping trend line that was breached. I needed to be careful, though, on the short side because I was trading against this indicator. Not a wise thing to do. So fortunately, I was able to shut that trade down right in here. So now we start shifting gears very, very quickly. And the tiny, so once the tiny candles on the S&P and what I consider to be a late entry are why I took gains on the SPY. So at this stage, I'm still thinking after yesterday's heavy selling, we're going to continue to see some selling pressure. But I got into that short position right about in here, halfway on that red candle. And so that was not a good entry for me. It was late. And so now when I see these tiny candles, I covered, not because I thought the market was going to run, but because I thought we might get a little bit of a bounce and I'd be able to short at a much better point, and then we drift down and test the 50-day moving average. So that was my thinking at the time. Once I saw that candle followed by that candle, everything changed. Then I knew that buyers were in control. So I'm going to continue to scroll down here, and you can see long Nvidia. This was an hour and 35 minutes into the open. Man, was that a great trade. And we're going to take a look at Nvidia and how that set up. Long SPY. And when I got long, I got long. And I believe in here you are going to see me tell members buy. Buy aggressively. And I'm trying to scroll back to show you that. Yesterday before the close, glad I covered my short. These are strong candles. Get long. Capital letters, exclamation point. This is 90 minutes into the open. So I'm telling everybody, you want to get aggressive with your longs. We are going higher. You can be aggressive with your longs. Again, this is about an hour and 45 minutes into the open now. So that sets the table. I'm long Nvidia. I'm going to tell you a little bit about that trade. I did buy some in the money lottery calls. Let's take a look at what the market's currently doing. And now we've got a double top formation right here. Don't have a lot going on with the 10p indicator. We've got an upward sloping trend line right here that's been breached to the downside. Two decent sized long red candles, but the market's been able to hold this support level. What I would like is one little doji here and then a red bar. Didn't get that, so we're getting a little bit of support here. That is a horizontal support level right now that seems to be holding up pretty well. So I wouldn't be aggressive in here, but you can see that these long red candles could be signaling some problems. I would be looking to get short right here. You do also have a bearish 10p cross. So let's take a look at Nvidia. Why the heck did I like that stock so much? Well, first of all, Nvidia announced earnings overnight. And you can see that right there. That is the A. This line right here is the 50-day moving average. Let's take a look at that 5-minute chart. As soon as I saw this chart and it came up on our relative strength 30 list, once I saw that long green candle that blew through the prior day's high, and there you can see the A tells me that there were earnings yesterday after the close. Once we blew through that previous day's high, I knew this thing was going, and look at the volume. Look at the orange line. Orange line above zero equals relative strength. Let's put up the S&P 500 overlay, maybe a little bit easier for you to see that. So as the market rebounds initially, and then we get that second wave of selling that I just explained to you. We had a higher low double bottom on the SPY. So this gray line is the SPY, higher low double bottom on the SPY. Pay attention to what happened when the market was down, 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 down hard. Stock up, up, up. This is a pressure cooker waiting to explode as soon as the market finds a bid. See you later. So this is when I bought the lottery, meaning they expire tomorrow, the 195 calls. They were slightly in the money at this point right here, and I bought them for $3.50. I ended up selling them at an average price of about $9 through the course of the day, but I had layered those orders all the way in here. So I was taking profits, and I exited the last of my positions right here. Why? How did I know to get out here? And I have so many members asking me all the time, how did you know? How do I know when to get out? I'm always leaving money on the table. How do I know? Well, you can see here that we've got, first of all, massive gains in the position. And yes, I have been taking profits along the way. There's a bullish flag. That was really nice. That led to this. Now we got a couple of long tails above body here. That is a sign that the stock tried to rally, smack down, rally, smack down. Okay, I don't like this. I want to lock in all of these gains. What did the market do when I started to see this? Gangbuster. Up, 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 up. Up until this point right here, the market's continuing to lift off. But the stock couldn't get any higher. Sellers were aggressive. They were taking profits, taking profits, taking profits. Well, guess what? I want to be out of my position at that point as well because the stock is starting to lose its relative strength. When I get this last leg of the market rally, I want to see this thing doing this. Boom, 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 leading the charge higher. When it fails to do that, it tells me that the selling pressure is very high and I need to get the heck out of the way. And there is your drop right there. 10p cross. Now we're down through the lower end of that. And if you can hold on for just a second, I am actually going to go in and I'm going to short some futures. And that way I'll have a position on right now. I do still feel that there is market weakness out there. So I want to have a position on and I've got that position off. So I am short the market right now. So watch the market. Right now we are 4 hours into trading. I think we're going to get a bit of a market decline in here and we could start to see some pretty big selling pressure in here. You can see some of these long red candles. I've only got a 2 lot on right now because I'm recording, but at least it's a tiny position. And I might add to that position before the video is over as well. Upward sloping trend line violated to the downside. There we've got a high right there. We've got a lower high double top. We're starting to test. I thought I had the VWAP up. I don't. It doesn't matter. I don't trade the VWAP that often anyway. I've got the technical patterns that I'm looking for right now that tell me that the market wants to head lower. So I may add to the position and it may happen during this video as well. Look at what Nvidia has done. Gosh, Pete, let's take a look at that daily chart. The daily chart told me you absolutely want to be in this stock as well. Take off that overlay of the S&P 500. There you've got a bullish flag. There's your flagpole. There's your downward sloping trend line. Stock was starting to break out through that downward sloping trend line as well. That's when it lifted off. So really, really nice. Super important for you to understand what the heck is going on in the market. And I have a lot of people asking me all the time, how did you know? How did you know? This had been setting up for the last couple of weeks. I didn't know right here. I just waited for it and I knew the price patterns that I was looking for. When I saw the market drifting higher on minuscule volume in here, tiny little doji bodies, these types of moves on extremely light volume are very quickly erased. And I've been telling swing traders not to be in the market right now because you need to wait for that dip to happen. Well, I take a lot of crap for that, quite honestly, because people are like, oh my God, look at the market go up without you. Fine, it can go up without me. That's not going to be a good entry point for my longer term swing trades. I need to wait for these market drops. Am I going to be entering swing trades right now because we've had this nice candle right here? Probably not. I've got this working right now. I see that the market's continuing to drop in here. So I think that we're going to see a little bit of weakness, a little bit of choppy price action. I still believe that 50-day moving average is going to get tested. We've got China's economy slowing down. We got the coronavirus starting to ramp up. We had the Fed. Yes, they mentioned yesterday that they're going to consider cutting back their asset purchases, excuse me. They're not going to do that until 2022. So that really, to me, it's not even a threat. So once we do find support at the 50-day moving average, I will be looking to add to positions. Bullish positions, excuse me. There is a bullish alert. We could take a quick look at that. I like it through the 100-day moving average. It's getting through technical resistance right here. Look at that volume spike. This is a nice one. Symbol on that is FISV. Watch it. This is a nice one. I like them when they're breaking through technical resistance on a big bar like that in massive volume. I can guarantee you people in the chat room right now are long this stock. Look at it go. I know the volume for every stock, for every 5-minute increment during the course of the day, and I know what the average trading volume is for this exact 5-minute period for every stock. And we just got a bullish explosion alert. I think I'm going to conclude there. Make sure that you put the market into context. Everything starts with the market. You hear me preach that every single day. The warning signs were there a week or two ago. All of a sudden we start to see the price patterns that I showed you unfold Monday versus Tuesday versus yesterday. Those are all signs that you need to pick up on. Once you get your market bearings like that and you recognize that the market is either strong or weak, in today's case it was very, very strong, you go into one option, into the Option Stalker platform, and you start looking for relative strength and patterns like this, where the stock is moving higher when the market is moving lower, and you've got massive, massive volume. You're through the prior day's high. You're through a daily technical resistance downtrend line. Checkbox, 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 checkbox. This is a combination lock. All of the tumblers, when they fit together, that's when you can ramp up your size. Until then, you have to patiently wait for your opportunities. Yesterday, I waited most of the day and I did not trade very actively, but when I saw that selling pressure start to come in, right in here, we had that little pop right in there. Whoops, sorry, I'm on the wrong chart here. SPY, when we had the FOMC minutes, and we had that pop right there, and then these two long red candles, I knew I wanted to get short, and I shorted aggressively to the point of even carrying an overnight short position. So that's the way that I trade. I hope that you've stuck with this entire lesson. I know it was lengthy, but I think there was a ton of really good information in there, and I tried to show you something that is applicable right here, right now, while it's unfolding. So please tell your friends about the channel, subscribe to it so that you don't miss any of these videos. Good luck with your trading. Watch for some follow through selling. I think these institutions are wise to the put sellers. Every time we get close to monthly options expiration, wham, wham, wham. Tomorrow's Friday. I think we're going to test that 50-day moving average. We'll see. I'm not going to try to guess what's going to happen. I'm not going to trade off of my gut feeling. I'm going to trade off of a double top with a bearish 10P cross and an upward sloping M5 trend line that's been breached to the downside. Good luck. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.